The next stock I'm going to introduce is Palantir. Palantir has been one of the best performing stocks in my portfolio all year. The prominent leader in the AI sector has seen its share price more than triple since the start of the year after 2022. Driven by strong results and high optimism around generative AI. The main question for investors, amid high interest rates that threaten to destroy prices, is can Palantir's rally continue? I last wrote a bullish note on Palantir in September, when the stock was trading close to $15 per share. I then assigned a price target of $18 on the stock, which represents a forward earnings multiple of 13x. Now, with a new interest rate boost, Palantir has surpassed that goal. As I wrote before, I have been long in Palantir since its IPO at $10 per share. I used the big fall last year as an opportunity to increase my position significantly. Now, with Palantir at $20, I take a similar approach to de-risking my position, selling about a third of my holdings, while I remain generally bullish. Practicality was the main reason for my decision. In the context of a risk-free interest rate of 5%, I want to reduce the exposure of my portfolio to high-value technology products and invest a little in cash, to benefit from possible market failures. At the current stock price of under $20, Palantir trades at a market value of $43.48 billion. After the $3.28 billion investment in Palantir's recent balance sheet, the company's net worth is $40.20 billion. Meanwhile, for the next FY24, Wall Street analysts expect Palantir to generate $2.66 billion in revenue, representing 20% annual growth. In terms of earnings targets, Palantir is trading at 15.1x EV/FY24, which I think is close to what this company can sustain in the near term. A profit margin of around 15% has become very rare, especially for a company that expects growth of around 20%. Palantir's revenue rose 17% year-over-year to $558.2 million, beating Wall Street expectations of $556 million. Growth was up slightly from 13% year-on-year growth in the quarter, driven by strong second quarter billings. Commercial revenue continues to be Palantir's main growth driver, with revenue up 23% year-over-year to $251 million. At the same time, the number of customers increased by 28 in a row to 330, while the company also increased the number of customers by 32. The company said that the speed of large transactions has increased and the change and expansion time has decreased, which is contrary to what other software companies have said. The environment of strong macroeconomics limits IT investment and delays. The next stock I'm going to introduce is Roblox. Roblox doesn't see much love in Seeking Alpha. Over the past 90 days, Seeking Alpha analysts have assigned 6 hold recommendations and 2 sell recommendations, compared to just 1 buy recommendation. And the only bull who has a buying recommendation is me. I don't really believe in all this bad feeling, which is different from my optimism. In fact, following an incredibly strong Q3 report, with Dow reaching new all-time highs, I am even more confident that Roblox can become a billion-dollar consumer platform, leveraging network effects customers' suppliers. For reference, Roblox stock is up about 36% year-to-date, outperforming the S&P 500 by nearly 2x. Roblox released the strong results of the third quarter in a surprising way, beating the financial consensus of analysts in the period from June to the end of September. The game platform generated $713 million in sales, showing a growth of 38% per year over a period of time. A year earlier, and a valuation of more than nearly $25 million according to estimates compiled by Refinitiv. All regions are driving Roblox's strong growth, with Europe, APAC, and the rest of the world driving growth in the NAM region. When it comes to revenue, investors should know that the growth of Roblox is not about investing. In fact, the growth is supported by the expansion of DAU in line with the company's mission to connect 1 billion people. As shown in the chart below, Roblox DAU in the September quarter reached 70.2 million. In this case, the performance in Roblox's growth vectors, internationalization and aging, is evident. First, I'll point out that Roblox's DAU expansion is led by the 13 age group, with users aged 13 to 16 growing 22% year-over-year. Last year, from 27 to 24 years old growing by 27% compared to last year. And 25% of users are under the age of 25. Second, when it comes to the international market, the Japanese DAU saw a high increase of 66% every year. Enrollment for the same area jumped 174% year-over-year. This suggests that the Japanese market is exhibiting a similar virus pattern to that seen in other wealthy international markets. In Germany, Roblox saw a 27% increase in DAUs, a 30% increase in hours, and a 75% increase in annual bookings. Similarly, in India, Roblox saw a 53% increase in DAUs, a 49% increase in hours, and a 76% increase in annual bookings. Perhaps one of the biggest concerns for Roblox investors is the company's losing business. However, I point out that Roblox's financial records reflect non-cash expenses, including product-based compensation and D&A expenses. By focusing on operational investment, Roblox is more than able to support its operations without any debt or equity funding. In fact, in the third quarter, Roblox recorded its 13th straight quarter of operating profit, at $13 million. Regardless of the net income, Roblox has a higher profit margin in terms of training costs and labor force. The first signs of this have already been given in the third quarter, with Roblox receiving an 18% annual discount on resource costs per hour of engagement. The company also said that its data center capacity should be sufficient to meet Roblox's expected demand by FY24. Also, in a call to analysts, management showed many ways to improve future profits. People's spending will begin to slow down more than bookings from the first quarter of fiscal 2024, and hourly IT&S spending will continue to decline. Going forward, I think this focus on cost control will also extend to broader employee performance. Surprisingly, R&D personnel expenses actually decreased in the quarter compared to the previous quarter. In 2024, the continuation of the application of insurance and aging will lead to an increase in Roblox DAU. But there's also an AI tailwind in the media that I enjoy when I think of Roblox. Regarding sports and AI, Morgan Stanley's equity research team recently published a study on how AI will change the future of sports. In this context, Morgan Stanley has established exposure to Roblox AI as having low risk and high upside potential. Specifically, the report identifies several growth drivers. First, AI tools have significant benefits in terms of financial savings and increased efficiency in game development, which can lead to increased revenue and advertising budgets. High for game publishers. Second, AI tools are ready to reduce barriers to entry into the game industry, which can lead to a larger game market and more games released. Third, AI can increase in-game engagement and payer conversions, which can increase in-game revenue. When it comes to advertising, I see huge potential for Roblox here, as I project $30 million in advertising revenue for Roblox year to date, despite suboptimal emerging advertising. Broadly speaking, investors should consider that currently only 20% of the platform's 70.2 million DAUs are paid users, suggesting that a staggering 80% are not making money. Planned initiatives for the first 6 months of 2024 include the launch of video streaming, portals and automated payments for the second half of 2024. Roblox is working on an e-commerce plan. Roblox controls projected $1 billion in advertising revenue by 2027, and I have no doubt that this goal is achievable. Roblox has long refused to provide reviewers with a visual guide. But in the third quarter, the company completely changed its position. Not only did the management of Roblox say that the company is comfortable meeting the consensus of analysts for the fiscal year 2024 of entries of up to $4.03 billion and adjusted EBITDA of up to $489.9 million. But the management also guided the target of 2027 CAGRN, regarding revenue and profit. Specifically, during the recent investor days, Roblox said that it is targeting a 20% annual growth rate in bookings for the period 2025 to 2027. Using the 2024 confirmation of $4.03 billion as a benchmark, this forecast shows a notable $8 billion in bookings for the year 2027. In fact, if achieved, it would suggest an increase of 30% to 35% over the current expectations of analysts for the 2027 budget, or about $6 billion, according to data compiled by Refinitiv. Roblox is full of growth, innovation and opportunities. International companies and the desire to grow old are seeing good things. While the expansion of the platform is expected to make the Roblox platform accessible everywhere. In addition, 2024 could set the stage for a lucrative media business, where the integration of AI will support the platform experience for creators and users. With that figure, Roblox recently announced a financial goal of a 20% annual increase in bookings from 2025 to 2027, and a 100 to 300% annual increase in EBITDA margin over the next 3 years. For the next 5 years, if Roblox achieves 20% annual revenue growth and 200 basis points annually through 2027, the platform will generate EBITDA of approximately $1.3 billion. As I estimate an implied EV/EBITDA exit of 30x for 2027, based on global growth potential, I estimate Roblox's intrinsic value at $70 minus 75 share. A Keter.